Hey, what's going on? Thanks so much for downloading this quick video. I want to jump right into it. What we're going to be talking about today in this quick video is we're going to be talking about a blueprint for success with trading. The one thing that I can't stress enough is not to overthink this process. Trading for most is exceptionally difficult. Trading for the few that are hyper successful understand that trading is not to be over complicated. So I'm going to give you some key points that I follow, that I've learned from successful veteran traders to me, that they follow, that successful traders for literally a millennia have been following. So if you don't have a pen and paper, right now would be a great time to get it. I want you to take a couple notes. And again, we're going to be putting together some of the key components of a trading blueprint. Before I move forward, I gotta put this up. You gotta go over this real quick. Pause here, give this a read, and then let's move forward. A little bit of backstory about myself. I've been day trading now for probably close to 10 years. I do have a finance background, and I've been working J. Lewis Trading now for about 3 years. And prior to that, I was working for a top competitor in this space as a coach and mentor for 2 years. So I've actually got quite a bit of experience under my belt when it does come to the educational space with trading specifically. And the one component that I have found throughout this entire process with the hundreds of people that I personally coached and trained, myself included, is that there are very, very, very specific things that everybody needs to be successful with trading. And again, I can't reiterate this enough. Don't overthink what I'm about to tell you. It does not have to be as complicated as you might think. So what we're going to be doing right here, right now, is putting together a trading blueprint. The core concepts are coming at you right now. Now, the one thing that I want to tell you about, and you've probably heard this stat, is that the failure rate for trading is about 90%. In some cases, it exceeds that. I'm pretty sure that most financial markets where traders are engaging them, the failure rates are exceptionally high, that are either at or exceed 90%. But what that tells me is that if the 90% are failing, 10% are succeeding. So this is really a question of, is the glass 90% empty or is the glass 10% full? For me, it's definitely the latter. So I knew that when I was coming up as a trader, and this is what I teach people as well, is that there's a margin of success to be realized. And it's in that I focus. It was in that when I was coming up where I had my big aha moment. My big aha moment was based on the fact that, sure, there's a massive failure rate, but there are people succeeding. And so I could do one of two things. I could focus on the people that are failing at this, or I could take that same energy and invest it in understanding, learning, and breaking down what the small, narrow margin of successful traders were doing. And that's where I parked a lot of my attention early on when I was coming up through trading, much like you're doing now. And it's something I still live in that space even today. I'm always looking at traders that are veteran to me, and I'm always listening to what these guys are doing, what these men and women are doing. And what is it that 10% continuously does to achieve those high levels of success? And these are some of the things I want to talk to you about today. The one thing that I found was of the utmost importance for myself, and this was a massive, massive game changer, and please write this down, is that for me as a trader, it all started with a trading philosophy. Okay? A trading philosophy. Please write this down. This all started with me with a trading philosophy. Now you might be asking yourself, well, what is a trading philosophy? Again, don't overcomplicate what we're doing here. Look at the word philosophy. The definition of a philosophy is encompassed by a body of knowledge. Now, if we put trading in front of the word philosophy, we've got trading philosophy, which is just, again, it's encompassed by a body of knowledge. Now, a trading philosophy, in my eyes, is a thought process or an application of trading skill set that is applied to the markets. It's a set of principles or a discipline that guides a trader through the decision-making process. It's that quote-unquote thing that creates edge. You might have heard this term in the past. It's a term that was coined by one of my favorite traders, Stephen Cohen at SAC Capital. And he would always say to his traders, you need to find your edge. Now, your edge is a byproduct of having a very specific trading philosophy that you exercise and apply to the markets. It's really about sort of mental toughness, as I have on the slide here. The markets will constantly throw losing trades at you. You need to be able to bounce back, and you'll be able to deal with the markets a lot better if you learn to lose properly. And that's going to be part of your trading philosophy. So please make a note. Trading philosophy of the utmost importance. Now again, a philosophy is nothing more than a body of knowledge. It's comprised of a set of principles like I just read. The first key to having a solid trading philosophy is understanding that you need to become a specialist. Now please don't overcomplicate this, but understand one of the primary complexities that throws most people off. The financial markets, whether it's equities, options, commodities, currencies, Forex, etc., Bitcoin, there's a lot of stuff going on. There's a lot of participants doing a lot of different things, and that's what leads the markets to becoming as volatile as they are. And if you go and you just sort of look for things to do, you will get moved around eventually to the downside in a very, very unforgiving fashion. But if you become a specialist, what you'll inevitably be able to do is find a niche that you then begin to understand better than most people. And when you park yourself in that space and you specialize on something very, very important, you will start to see more success than some of the people standing next to you. For example, if you're in a trading space and you just stand there and you trade that one thing over and over and over again, for everybody that comes in and goes out, they're failing. But if you can stay there in that space and carve out a niche for yourself, you will see success. One of my favorite traders, Linda Raschke, says, you only need one pattern to make $1 million. Keep that in mind. Now, part of having a key focus and looking at opportunities that are out there is having that narrow focus, like we talked about. You have to be a specialist. So, often referred to as a niche trade or a niche trader or niche trading, you need to have that one thing that you park yourself in that you never leave. It's like that colloquialism, stay in your lane. So with that, you want to ask yourself very simply, am I going to trade stocks/equities, options, futures, Forex? Am I going to be a day trader? Am I going to be a swing trader? Am I going to trade commodities? There's a whole bunch of variables out there that you can actually pick and choose to trade, and you can stay right there. The thing about being a specialist is that when you stay in a lane and you've got that niche trade, you then start to increase your edge simply by knowing that area better than most people. When certain things happen in the commodities market, for example, and certain reports come out, if you're a specialist in that space, you will know exactly how to work that area. If you're trading specific stocks that are optionable, like me, I've got a universe of stocks that I follow. I don't actually even have to step out of that universe. And I stay in that space, and I've got a very firm understanding of how they all move independently of the market. I understand the bids, the asks, the spreads. I understand the volatility on the options that are attached to them. It all is the byproduct of specializing. When you become a specialist and you can sit there and understand something better than anybody else, you get to know the personality of these stocks, and that will help you trade them better. So remember, one of the key components to carving out a solid blueprint is to be a specialist. So look at this list: stocks, options, futures, day trading, swing trading, commodities. The best thing you can do is do a little bit of research. Understand what here makes the most amount of sense to you and add it to your area of specialization. When it comes to being a specialist, I strongly suggest that you trade or pick a trading strategy, I should say, or an approach that closely follows your own personal temperament. The better you understand yourself, and this is true, the better you'll be able to connect with your trading strategy. One of the key moments in my career as a trader came from the fact that I was swing trading and I didn't really like it. And I was doing some long-term day trading, as in trading the entire session. And I saw some success there. But when I looked in the mirror one day and I dealt in honesty about one key thing about myself, that I'm extremely impatient and that I want to see results right now, I was able to actually pivot and build a strategy around that. I'm horribly impatient when it comes to the market. And that's exactly why I've specialized in trading the first 30 to 60 minutes of the market like clockwork with a high success ratio. And I've been doing it for years. But that is the byproduct of understanding my own personal temperament. So when it comes to being a specialist and carving out a niche or a lane for you to trade in, the best thing you can do is do some introspective work and ask yourself about you. Ask you about you. What are my personal attributes that I can apply to the market, and then start to build outwards. And the value in doing that is when you build out a strategy that is based on your attributes and your personal temperament, you will, through osmosis, be able to connect with that strategy exponentially better. Okay, so that's very, very important. Become a specialist and build a program that works around your personal temperaments. Please write that down. Once you've decided on the niche or the markets or the style of trading that you want to engage, you'll want to build out a rule-based, structured trading strategy. This is absolutely key. This is absolutely key. It's a non-negotiable. Every trader has to have a trading strategy. Now, there are going to be trading strategies that don't work. There are going to be trading strategies that fail, but there are going to be trading strategies that are exceptionally successful. And that's what we're going to build for you. But it's all going to derive from working a trading strategy that is based on structured rules. Being a specialist would be one structured rule. Building a trading program around your personal attributes is part of that structure. Understanding pattern recognition and risk management, which we're going to get into in a moment, is part of that structure as well. These are all components of the blueprint that we're putting together so you can start to experience success sooner than later. Now, 100% of being a successful and consistent trader will depend on having a well-structured strategy. Here's the thing about a structured strategy. There are strategies that are going to be back-tested and forward-tested, and they yield a very specific positive result. If you don't have that, you are literally trying your luck. I run into people all the time that say, I'm going to self-teach myself, and I'm just going to throw a bunch of things at the wall and I'm going to see what sticks. That's crazy. The fact of the matter is this: the markets move up and they move down and they move sideways. Your job as a trader is to dial into this one core fact, and that is you're an opportunist. If the market gets long, you get long with it. If the market gets short, you get short with it. If the market's consolidating, maybe you take a step back and wait for some directional insight. But all of that is going to be geared towards having a structured strategy that has been tested. If you want to long the market because that's what the market is giving you, then do that, but only do it with a very structured strategy. Components of a structured strategy: risk management, understanding the niche that you're trading, understanding pattern recognition, so on and so forth. So these are a few core components of a rule-based trading strategy, and it's non-negotiable. You have to understand, once you've created that niche for yourself, once you become a specialist in an area, you then have to understand that once you're in that zone, where do you actually go to find opportunities? And when you find an opportunity, what type of pattern recognition do you use to engage that opportunity? So, for example, if the markets are bullish and they're long, you don't just arbitrarily buy into that trade. That's not how it works. what you want to do is you want to get best price. And generally speaking, pattern recognition will not only help you get best price, but it'll also cue you up for the moment volatility is about to hit that market so that you can actually get in cheap and really extrapolate on your potential gains. And on the back end of that, and this is the most important thing about trading, is you have to manage your risk. Understanding your risk parameters before you get into the trade is of the utmost importance. For me, it's non-negotiable. Every single trade that I get into, the moment that I hit the buy button, the entire trade has already been structured out. And I always structure every single trade out with risk management in mind first. I understand technically where I'm getting stopped out. I understand size or contract size that I'm trading. I understand how much capital is going into every single trade. Every aspect of the risk side of the trade has already been carved out and understood. And the last thing I do is I hit the buy button. This is a big one. I'm going to go back to finding opportunities. It's of the utmost importance that you don't just arbitrarily go to the market and look at things and say, hey, that looks great and it's bullish, so I'm going to get long today. One of the things that you're going to want to do when you're carving out a strategy for yourself and you're becoming a specialist is you're going to want to put together certain things that you're going to want the market to give to you. So this is a big one that a lot of people don't understand. You don't have to go to the market and look for stuff. You can actually say, this is exactly what I want, build out a scan and have the markets bring that to you. And if the market brings you 10 stocks, for example, that are based on your scan, you can then get real picky and fine-tooth comb those opportunities to see which one of those 10 opportunities is best in show and then take that trade. Another thing that you're going to want to do when you're going through this process, aside from building a scan, is have a watch list. What's happening to these stocks? When are they pulling back? When are they getting long? When are they about to get volatile? These are all things that you're going to want to learn to do and build a strategy around finding those, putting them in a watch list, and waiting for the exact moment that they're about to get explosive, long or short, and get into that trade. So building a watch list is key. You're going to want to create opportunity. Don't wait around for it. If you wait around for it, you'll inevitably start trading at random, losing, and the market is going to nickel and dime you to death before you have an opportunity to get in and get paid. Also, and I mentioned this earlier, having a universe of stocks that you follow is fantastic. Like I said earlier, Linda Raschke, she once said, famously, that you only need one pattern to make $1 million. That is absolutely true. So if you've got 10 or 15 stocks that you've put together that you understand in a universe, you can actually sit in that realm and not care about what the rest of the market is doing and just focus on those key stocks. And when they put out an opportunity that you understand how to trade, boom, you get in and you do your thing. Now, one thing that a lot of people are familiar with, but they don't necessarily execute this or exercise this properly, is pattern recognition. You know, these patterns are not only self-fulfilling prophecies, but they're something that they recur over and over and over again. Now, the big pattern that I trade constantly, which is arguably the oldest pattern out there that is a non-negotiable follow-through, is a flag. Price action moves up, it pulls back, it gets long again, or vice versa to the short side. Stocks don't move straight up or straight down. They ebb and flow, and that's essentially what a flag is. But part of what you're going to want to do in becoming a specialist, understanding your niche, and while you're building this trading philosophy and this strategy, you're going to want to plug in which patterns you're going to focus on the most. Now, in front of me, on my desk here, I actually have a book. It's called the Encyclopedia of Chart Patterns. There are over 800 pages of technical analysis in here, broken down pattern by pattern. That's how many there are. There are a ton, but I only focus on 2 at most. Flags consumes about 90% of everything that I do when I'm trading. So pattern recognition is something that you are not going to want to deviate away from. Get to know the patterns that pose the highest probability and use them to your advantage when your scanner produces opportunities for you to trade. Now, once you've found a solid opportunity to trade and you've pinpointed a high probability entry using pattern recognition and everything else is working in your favor, you want to remember this going into every single trade. Risk management is where you start the game. Always look at things from the risk management perspective first. There is no trader on planet Earth that has a long career. They have never hit 100% of their trades. Human traders have never done it. Computer traders, computer trading programs have not done it, will not do it. So you have to understand that risk management is very, very important. And part of risk management is your mental capacity to understand and be okay with the fact that trades are going to go against you. And you have to be able to deal with that. That is a huge part of risk management, the psychology behind trading. So I just want to summarize this real quick because I have thrown some really big key components at you. The one thing you're going to want to do is become a specialist at trading. Understand that one space that makes the most amount of sense to you. And what I would suggest, honestly, is look at 10 different markets. Look at thousands of different equities and commodities and Forex pairs and options, and whatever sings to you, grab that, put it in your back pocket, and build on it. Create a rule-based structured trading strategy. This is a non-negotiable. It all has to be based on rules. When you create a structured trading strategy based on rules, you've created a lane that you must stay in, and your discipline will keep you on track. If you don't have something that's structured and you just at random go to market to trade, you'll get hammered. So don't get caught in the trap. Create a rule-based structured trading strategy that is extremely focused on risk management. Capital risk management, mental risk management. And truthfully, the mental risk management is greater than the capital risk management because a lot of traders will throw good money after bad because they're mentally not in the game. Putting on too much risk because of ego. Putting on too much risk to revenge trade. These are all psychological deficiencies that occur when you're trading. So mentally, your risk management game has to be on point. So build out that trading philosophy. It's key, it's of the utmost importance, it's a non-negotiable. It'll keep you out of a ton of trouble. Don't think that there isn't a ton of value in building out a trading philosophy. Okay? Now again, a lot of stuff has been thrown at you. You already have our contact information if you've downloaded this, but let me just sort of put this out there again. If you have any questions, you can contact me or my team directly at info@jlewistrading.com. I'd love to hear from you. I'd love to get your feedback on this video. And more importantly, I'd love to help you. So if you have any questions, do not hesitate to reach out and connect with me. I am here to help. Understand that I have helped hundreds of people just like you through our programs, through this trading process, through the mentoring process, through the mastermind process. We've helped tons of people. Now, if anything at all, I hope that you've grabbed some valuable information out of this, and that's all that this has been put together for. It's just to give you some value and some structure on how to look at this game differently. A lot of people are going to be out there saying, do this, do that, and there's a lot of great information out there, but this is the real crux of successful trading. Go back and watch this video again. Make a note of some of the key components that we talked about in this video. Email me, info@jlewistrading.com if you have any questions, and understand that there's a very, very specific top-down approach to trading. And it all starts with building out a blueprint. And that blueprint is 100% based on having a solid trading philosophy. If you're still stumped on what a trading philosophy is, info@jlewistrading.com. Hit me up. Let's get in touch. Let's connect for a call, and I can walk you through this. Thanks so much for watching. I hope some of this has helped. Please, info@jlewistrading.com if you need me.